So most of these companies do park their surplus funds in mutual fund investments.
Yeah.
So which is a non-business activity. And when the mutual funds are sold, it leads to an exempted sales. What do you think about the eligibility or the impact of the same on input tax credit?
So certainly the treasury function for companies perform investments, and investments in mutual funds is one of those things. And gains which lead to those, be it surplus or otherwise, certainly add to the working capital or otherwise of the organization. Now, under the GST law, securities include mutual funds, and sale of securities is something which is exempted supply. Now, whenever mutual funds get sold, that portion of turnover is not something which is subjected to GST. Now, whenever you have taxable and non-taxable, what the law says is, for the portion of the turnover which is non-taxable, there is reversal of ITC requirement which is there. Now, for mutual funds, particularly securities, there is explanation 2 in chapter 5 of the CGST rules, which has a valuation mechanism. So it does not take the total value of the sale of mutual funds. It only says that 1% of that value shall be treated as the exempted turnover. So if you have, let's assume 100 lakhs, then 1% of that is 1 lakh. So if you have 1 crore of sale of investments, then the value of exempt turnover is 1 lakh. So whatever is the exempt turnover, what as per the law in terms of reversal, something which is directly related to that exempt turnover, I can't take credit because it is directly related, or something which is common. Right? So I'll have to identify what are those common credits and then reverse that in the ratio to which value of exempt turnover bears to the total turnover. So the value of exempt turnover in this case could be, let's assume we have taken the example of the 1% of total sale, which is 1 lakh, divided by whatever my total turnover is. That ratio, I multiply it with the common credit. More often, I think you brought this out as an aspect, more often this is missed out. So this is something which companies need to kind of know, and it is very important compliance. And anything of that nature will require reversal of ITC, and if it is not done, it gets required. I mean, you'll have to kind of pay that with interest or penalty.